Hello everyone, welcome to the market outlook for the week. Gaurang Shah here from Geojit Financial Services, and as I speak to all of y'all this Monday morning at around about 10 o'clock, there has been a little bit of profit booking on the screen. Before I go any further, let me give you the levels on the Sensex, Nifty, Bank Nifty, Rupee, Dollar and crude oil. Sensex is down about 101 points, 82,030 is the level on Sensex. Nifty is down 25 odd points. 24,745 is the level on Nifty spot. Bank Nifty up 70 odd points. 53,650 is the level on Bank Nifty or Nifty Bank. On Rupee Dollar equation, well, a slightly flattish but on the lower side. Rupee Dollar 84.81 is the level on the rupee against the dollar. Last week we saw dollar supply from central bank as well as other banks, which kind of supported the rupee for short term. Remains to be seen whether we are going towards 85 level, which is a likely possibility on the rupee against the dollar, and at those levels whether the intervention is going to help or not is what we'll know. But looks like the rupee is heading towards a little bit of more weakness against the dollar under the given situation and circumstances, as far as the dollar strength against all emerging market as well as other developed market currencies are concerned. On the Brent and NYMEX, a little bit of downtick, $74.23 to a barrel is Brent, $70.93 to a barrel is NYMEX. Slight bump up, but no cause of concern, especially after the announcements made by OPEC plus Saudi, as well as the demand supply situation. A little bit of spike up was there last week because of the Chinese stimulus, which kind of fizzled off. It was only momentarily. So remains to be seen what is the situation on both these front. OPEC plus news flows as well as the situation in the Middle East, which is largely the driver of crude oil prices either on the up or down side. Now coming to the market trends. So after Friday's fantastic recovery post first half closing, we saw markets were down and out in the first part when the markets opened up on Friday, and then by the time the markets closed on Friday, we had a stellar recovery across sectors, across frontline, mid cap, large cap, broader markets. We saw the contribution coming through, which propelled us to take over the resistance levels of 23,350 to 23,450, and we are maintaining a positive stance with markets moving towards that 24,750, 24,800 mark. But we'll have to give it to the markets. There was resistance at higher level, which we elaborated week before, of 24,550, 24,650 on the higher side. But the consolidation that we saw over the last week and the week before helped us to go beyond those levels, and currently we are maintaining about 24,700, more so on 24,750. Now if we are able to maintain this momentum and if we are able to stay above 24,700, then I think within a day or two we would possibly see higher levels of 24,850 and 25,000. But for that it is prudent to see the India volatility index settle down. Though when the opened up for the trade this Monday morning, India VIX was at about 13.05, but as the day progressed ahead and as the time goes by, India volatility index has climbed up. India volatility currently is about 13.91, which is a spike of 6.5%. This leads to higher volatility in the market. Undoubtedly, we mentioned this a couple of times. Even when the India VIX was at about 14, 15, 16, we mentioned that it is prudent for it to come down. It has come down to 13, but again it has spiked up. So I think anything below 13, 12.5 and 12 will give you a little bit of more comfortable zone in terms of volatility getting reduced. But primarily I think this is what we'll have to see. But important to note that despite of this volatility and profit booking, we are able to maintain ourselves on the Nifty spot at above 24,700. So this is a positive takeaway, and if we do that, then I think 24,850 to 25,000 is possible. On the lower side, we can possibly see levels of 24,350 and 24,500, just in case we lose out on the ground being held out of 24,700. So that's the broad range on the Nifty spot. I'll again repeat, Maintaining 24,700 will take us to 24,850 and 25,000 on the higher side. And if we break that, then I think 24,500 to 24,350. These are the broad two levels on the lower and the higher side. Now coming to the global situation. Well, this week we'll have the announcement from US Fed as far as the rate cut is concerned. Most likely it is going to happen, though the statement made by the president to be Mr. Trump on tax cuts and tariff hikes remains to be seen if that is going to be the situation once he assumes the Oval Office and what are the policies that he'll put into place. Other than that, other than US Fed policy decision, monetary policy decision from Bank of England as well as Bank of Japan, and we'll have macro data with respect to US GDP number and PMI data. So this week is going to be full of global macro data with US Fed decision to the monetary policy decision from Bank of Japan, Bank of England, and then of course the PMI and GDP number from the US. We'll react to these numbers as and when they start unfolding this week. IPO market is again robust. We have almost 6 IPOs hitting the primary market and about 3 odd in the SME market. As usual, need to look at the valuation and we need to look at the business and the growth prospects when it comes to investing in IPOs. We are talking about primary only. SMEs we don't cover, so we can't make any statements on that. On the flows front, friends, we've seen last week flows have turned positive as far as FIs are concerned. But now today we are on the 16th of December, and as we all know, from now up until first week Jan 2025, we are going to see a subdued activity as far as FIs are concerned because of the holiday season, Christmas as well as New Year, and then coming back in the New Year, and we'll have to see what the FIs does. But we also have to keep in mind that we are also going to see a curtain raiser for the budget, 1st of Feb 2025. We'll be talking about that as well as we go closer to that particular date. So friends, overall I think markets will consolidate over here. We are in a positive territory as of now. And if we are able to maintain 24,700 on the Nifty spot, then 24,850 to 25,000 is a possibility. And the fact that we are slowly, steadily moving up, and then of course, keep your eye on the volatility index also. Need to come below 13, closer to 12.5 and 12 for a meaningful sanity to return in the market and to see lower volatility. We always give you investment ideas, friends. We have got 2 broader market investment ideas. First one is a small cap cement manufacturing company called Sagar Cement. We have seen cement stock perform last week with the kind of consumption going up, cement bag prices getting pushed up. Most likely that we are going to see another hike anytime next year, possibly in the first calendar quarter of 2025. And the input cost is coming down, margins are getting expanded, profit margins are looking quite strong, and the real estate sector, government spending, state government spending, private capex, etc. doing well. So expect cement sector to do well. So this is a small cap cement manufacturing company with good presence, good financial strength on the balance sheet, Sagar Cement. The second is from a rather retail sector, Aditya Birla Fashions Retail Limited, ABFRL as we call it. ABFRL had put in a lot of money about 2-3 years back in acquiring strong brands. All that acquisition spree is now done and dusted, and I think with the acquisitions in place and now no more further immediate acquisitions coming through, contribution should help the top line and bottom line. Footfalls, eyeballs, whatever you want to call it, is increasing, and our sense is that on fallback of strong earnings, we should see a re-rating of this company as well, Aditya Birla Fashion Retail Limited. Mind you, friends, these 2 investment ideas, Sagar Cement and ABFRL, that is Aditya Birla Fashion Retail Limited, are long-term investment ideas on the fundamental side. So you need to have longish time horizon. Since they are broader market, small cap universe stocks or small to mid cap universe stocks, there will be volatility. So use those volatility on the lower side to add to the stock. Don't put all your money at one time. Staggered approach is always a better way to invest in stock market from a long-term point of view. Thank you very much for your patience hearing. I'll see you again next week. Please do take care of your health. Bye-bye.